Good morning, everybody, and this is your DAX day trade setups for today, 20th of February. So, starting with the 8 hour, nothing really here. We do have a bit of diversions that did form between these first two highs here, and then we've got diversions between the second two highs. Sorry, I lie, we don't. So, really, just between that high, and then we sort of we formed a lower high there. So, pretty much a setup for a head and shoulders, but again, as I said last week, you need to get through the level or the neckline for the head and shoulders to play out. And at the moment, this is just one big happy range with two fake outs to the upside. I just want to start off on the weekly because you can see last week pretty much an inside bar, pin bar off this level. That's 15,579. We've had 3 attempts at it now. And there is the oscillators grouping to the upside. But for us to start getting shorts out of this, we need a break below 15,250. So until that happens, trend is up. We've got a weekly crossover of the oscillators now as well. So everything is just looking relatively bullish. We are in an uptrend. We've been going sideways for 3 weeks, and it tends to do that. If you look here, 3 weeks sideways, up, 3 weeks sideways. So what now? Up, 3 weeks sideways, or are we going to just extend the sideways motion? When we start looking at the lower time frames, you can see the whole of last week, big up, big down, big up. So buyers are in control of this at the moment. Trend is still up. It's just a messy sideways upward trend. And obviously we need to see break of structure before looking at anything here. So just on the hour, you can see from Friday, I mean, that's a proper big down, big up, big down, big up. So below the moving averages, above the moving averages. I'm really not interested in jumping in long on this in this situation. I want to see a pullback onto structure, and I want to see us holding that structure before even contemplating this. So we're too close to the top end, and there's a few little levels here. So I wouldn't pay too much attention to that, but let's just put that top one in as well. So you can see we are basically 90 points from the upper end. So I'm really skeptical about this at the moment. Logic just says to me, find a level, rejection, back down below the moving averages to look for some other support, and that would be a logical level right there, even though we did get a flag move back onto that and then a break to the upside. So yeah, I'm really not keen on putting my money into this at the moment. Every day it changes. I don't know if you've noticed that. So every day we look at it, it looks bullish the one day, and then the next day you look at it, it's bearish, and then bullish, and then bearish. So that is typical of a range. You know, it's up and down, up and down, up and down, and you know, it just messes with you, which is why I don't like trading ranges at all. So I'm not interested in this. I'm going to want to see us break above 15,637 properly with a decent pullback onto that area before I start jumping in on longs here, and I'm really not interested in jumping in on the downside. For as long as we're above and below moving averages like this on a daily basis, I have zero interest in trading this. And looking at the oscillators right now, we're probably going to get a rejection for a pullback again. So I'm not sure what we're waiting for. We had a whole lot of noise come out in the market last week and the week before. So you would have expected something to start brewing. We've sort of come through earnings season as well, fairly unscathed, but we are still sideways. So I suspect we're still building a base, and my bias is still for a break to the upside at the moment overall when you look at the 8 hour. But we've got to get through that area of resistance before we do that. Level to pay attention to is 15,250. Drop below that, retest that, then I am on a bearish opinion. But at the moment, I think I'm fairly neutral for today, so we'll just stay out of this and wait and see. There are some gaps to the downside. If you just highlight, there's one, there's another. And I don't see, oh, there's one right up here as well. So you could actually just watch those gaps. And in fact, that probably looks like the best opportunity at the moment. It's weak as hell. There's quite a bit just below it, so let's do that. There we go. So this little zone here, which would be at the bottom side of the moving averages, that's 15,480 and 15,472, 15,500 would be the next logical level. But any pullback into there, it might be worth watching and see if you can actually get a move back to the upper end of this range, which is between 15,579 and 15,637. Definitely not looking to be long here. If it does pull back onto structure and we get price action, it's probably worth it just to take it on the break with a tight stop loss, because you're going to end up with something along the lines of a 40, 50 point stop loss for 85 points, 100 points, or 140 points. So that would be fairly decent. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.